Welcome back guys for another video. I'll be talking about the price action on SPY, going over my exact game plan and the different key level I'll be watching for next week. But before actually going to the chart and do the whole game plan, let's actually check out the US economic calendar and see what kind of news we'll be dealing with next week. So if you remember, last week was really eventful. We had FOMC. The Fed have decided to cut rate by 25 basis points. And if you guys remember, on FOMC day, we had a strong drop and we saw a nice recovery as well. And later, the price action kept pushing on Thursday and Friday. I'm not trying to be too technical here, but I'm just trying to actually give you a small summary of what happened last week. This week as well, we'll also be having a volatile week as well. Let's look at Monday really quick. So we start Monday with a bunch of Fed speaker. Monday will be really interesting because all those Fed speakers can actually make some comment regarding interest rate and they can actually move the market at any moment. So this will be really tricky. So at this time right here on noon EST, make sure to know that we can actually have a lot of volatility. And also 10 a.m. 9:95, you just know those Fed speakers can actually make a comment that will move the market. And now we have Tuesday. Tuesday, we also have the Fed Chair Jerome Powell. They'll be having a speech as well. So this right here is going to be one of the highlights of the week as well. I'll be definitely watching out around this time. On Wednesday, not too busy. We only have new home sales, nothing major. On Thursday, however, we have a packed day. So pretty much starting the day before the market open, load of news right here, so the market can actually go either way. So this right here is going to be a really interesting day and altogether an interesting week, because right after Thursday, guess what, we have more economic data, right? Inflation data. We have PCE. That's one of the key inflation data that the Fed love to focus on. So we have all those inflation data right here. We also have personal income, and guess what, we also have consumer sentiment, and that's gonna be the final rate. So all those data right here will be moving the market. So we're gonna have pretty much the pre-market move, and then we're also gonna have a major move out here at 10 a.m. as well. So Friday is going to be a really volatile day. Let's go over SPY and go over the price action. So I'm currently on SPY right now. So let's quickly go to the weekly time frame. So when I go to the weekly time frame here, you can see SPY being really strong, man. The market being pretty bullish, making higher highs almost every week, making new all-time highs. Right, we actually broke that level again. If you've been following my analysis, I kept saying that the main price action here is to the upside. You can actually try to catch some downside, but you have to be really good on the timing. And so far you can see the market has been pretty green. Remember, we are on a weekly time frame and look at all those candles, only green. The last candle that we had was red, was this one. So 1 2 3 4 5 6 7, that's 7 green weekly candle in a row. So that means if you're a day trader and you pretty much focus on trading to the upside during all that time since August right here, you will be good. Like that means like you have a higher chance to make money to the upside. That's why trading with momentum is in general. And if you want to make money to the downside, then you have to be really good at timing when you have to trade against the trend, which is not really beginner friendly. So that's why I always recommend beginner to trade with the trend, which is so far be going to the upside. But when you buy with the trend, you don't want to also buy at the top. So here I'm on a weekly time frame, it's at the top. You want to buy on the lower time frame when it looks cheaper, because the overall trend will actually help you to push the price higher as it get developed in a higher time frame. But not too deep of a lesson here. I want to talk about the price action. So you can see right here we have a nice weekly candle, but you can see that we also have a nice low wick at this level right here. And this right actually happened on FOMC day. FOMC was the main event for last week. So this actually happened on FOMC day, and that's the drop we had before the recovery. And we end up trading Thursday and Friday to the upside, closing the week all green. But let's actually go to the daily time frame so we can actually see what it looks like. So let's actually also change my key level as well. I want to talk about those key level. Let's actually change the style really quick. I forget to do that. So I like to actually color code my key level. Actually helped me. This candle here was pretty much the FOMC day candle, and that actually happened on Wednesday. You can see we had a strong push to the downside, and then we actually closed here, and the next day we actually gap up and make a new all-time high at this level. And on Friday, that's how we actually traded. So for the most part, we pretty much been traded to the upside for last week. And that's what we have here. So you'll notice on my chart right now, I have a lot of key level where it's related to FOMC. So I have here the FOMC low of the day. That's the key level I'll be watching for the future. And here I have the FOMC opening print, which I think if we actually have a selling momentum. That was going to be my target for a bounce already. And here I have the FOMC half the day as well, because I believe if you're a day trader, you can easily come and retest that level before going higher. And depending on the key levels, or I add different game plan. So again, let's talk about, since we're still in the bullish price action, we can still continue to go higher again, or can go higher even though we're getting a little bit extended, but you can actually find a way to make money to the upside. So for me to actually focus on one direction to the upside here, I need the market to actually make a new high so I can actually catch the next momentum to the upside to actually go and be even more overextended. So I will mainly look into actually buy if we can clear this. But for now, I'm focused to the downside. I'm focused to see if we can actually have a pullback, and this will be the all-time high for a while. Right? But if we break this, then we can actually go and make it some new highs. That's what I'm saying. But as long as we actually below this, then I can actually see the price action can actually come and retest the different levels from the FOMC day. First level I'm watching for a test is going to be the FOMC high of the day, which I don't see that as a strong support, but I think I see that as also a bounce level. So if I'm day trading and the price can come down here, I can look for a possible scalp for a shorter time frame. But I think if we start to actually try to lower, the main key level that will be drawn to will be the FOMC opening print. So the FOMC opening print is pretty much the price where we open on that day. That's all it means. Pretty much like when SPY opened on Wednesday, what was the first price that was read on the code. Just to summarize really quick, for a move to the downside, I'm definitely watching for a retest to the FOMC opening print. And if we lose that, some key level in the middle right here, but I think we can actually go trade lower and go back to the low. It doesn't have to be the big target, but that will require a bigger move, right? And I think since we have major news during this week, then this right here to the downside, the FOMC low of the day is a big target. I'm watching if we go to the downside, right? From all the way here, it's about 1.4 move to the downside. That'll be a big red candle if that happen on the weekly time frame, but we'll see. If that doesn't happen, I know for sure if we have some selling momentum, the FOMC opening point will be definitely tested. That's a higher likelihood. And to the upside, when we clear the all-time high, I think we can be in the hole to actually hit 670 if we pretty much have a more bullish price action with the volatility that we can actually have in the morning. I mean, this week can actually go to actually hit 670. That's about less than 1% to the upside. I'm only looking to actually mainly buy about those levels. And for other buying opportunity, if I'm trying to trade SPY specifically, then I'll either watch this as well for a bounce, because if it comes down here and we can actually clear this, most likely we're gonna bounce really strong to go back to that all-time high. All right, so those are the level that we're gonna be drawn to: the all-time high or the FOMC print. Those are the key pivot level you're definitely gonna watch specifically. So if we go back to the 1 hour, look how we've been trading at those levels so far. That's how we've been trading on that level so far. So here the price action was pretty much trending up, and when we actually lost that level right here, strong move to the downside and actually reclaim it, came back, retested, came back, retest that same level again. So far I think that's a nice support. All right, so there's like the price action tend to be really drawn to that level, and if we lose the FOMC high of the day, I think the good chance can actually retest that, because the 650 itself, it is a psych level. It's not just the opening print level. That's also why I'm also watching that level as well. I think we can be drawn that, and that's why I did the FOMC high of the day. It's a bounce level, but it won't be as strong as this right here. So this right, if we have a bounce right here, it's more meaningful. But if we come here and we have a bounce, I'll be really hesitant to actually enter. And this way, if you come here with a bounce, I'll be more confident to actually enter the bounce at this level, because this ability can be stronger. But if you come here and we lose that, it's also making major statement from the seller that they want to go lower. So that's what I'm watching. So I don't want to make this video too long, so I'm going to stop here. Thanks for watching, and see you on the next one.